Stop what you're doing right now because something massive is happening in the financial world. Silver prices are absolutely exploding, and most people have no clue this is even going on. In the next 60 seconds, I'm going to show you why this is happening and how you can position yourself before it's too late. Welcome to Wealth Wave, where we cut through the noise and give you straight facts about building real wealth. Smash that like button now, and if you haven't subscribed yet, hit the subscribe button to catch our weekly money growing videos. Let's dive into why silver is going absolutely crazy right now. Just a few months ago, silver was trading around $23 per ounce. Then the price started climbing, $25, $28, and recently above $34 per ounce. That's nearly 50% gain in a short time, meaning a $10,000 investment could already be worth $15,000. This might just be the beginning, according to top experts. Several factors are coming together to create what some call a perfect storm for silver. Supply and demand dynamics are driving this explosion in prices. On the demand side, the world is going electric with EVs taking over the automotive industry. Electric vehicles require 25 to 50 grams of silver each for electrical components and batteries. Tesla, Ford, GM, and Volkswagen are all committing heavily to electric models. Solar panels are another massive silver consumer, with each using about 20 grams of silver. Governments worldwide are pushing green energy initiatives like never before. Solar capacity is projected to triple by 2030, drastically increasing silver demand. 5G technology also drives silver usage, as base stations, smartphones, and telecom equipment rely on it. Silver is the best conductor of electricity and heat among metals, making it irreplaceable. It's also used in medical equipment, water purification, batteries, RFID chips, and antimicrobial clothing. Silver mining hasn't kept up with demand, as most silver comes as a byproduct of mining other metals. Only 30% comes from primary silver mines, creating a bottleneck. Companies have underinvested in exploration and new mines for years due to low profitability. According to the Silver Institute, we've been running a supply deficit for years. Stockpiles are shrinking, with above-ground inventories dropping over 50% in the last decade. Eventually, supply shortages drive prices higher, and many experts believe we're hitting that wall now. Inflation is another key factor affecting silver prices. Everyday goods are getting more expensive, eating away at purchasing power. Precious metals like silver act as a hedge because they cannot be created like paper money. During the 1970s inflation crisis, silver rose from under $2 to over $50 per ounce. That's a 25 times increase in a few years. While history may not repeat exactly, parallels with current government spending and monetary policies are striking. Central banks buying gold at record rates creates a spillover effect into silver. Institutions and retail investors see silver as an accessible alternative. You can own much more silver than gold for the same dollar investment. The gold to silver ratio shows silver has been undervalued relative to gold. Historically around 60 to 1, it has recently reached 90 to 1. Analysts see this as a potential correction opportunity. Experts like Peter Schiff note, silver could outperform gold due to its dual role as monetary and industrial metal. Investment and industrial demand together push prices higher. Explosive moves can result when both factors align. Major investment banks are also bullish, with Citi Research projecting silver could reach $40 per ounce. Bank of America suggests it could eventually test $50 per ounce. These forecasts come from reputable research teams, not random opinions. Jeff Christian of CPM Group, with over 40 years of experience, calls this one of the most compelling setups he has seen. Supply constraints, industrial demand, and macro concerns point to sustained price appreciation. Investors should watch closely for long-term opportunities. Silver is highly volatile, able to swing 10 to 15% in days. Short-term price moves can be dramatic, creating both risk and opportunity. Discipline and a long-term perspective are crucial for navigating this market. Historical spikes, like silver's rise to nearly $50 in 2011, followed by a crash, highlight the importance of timing and patience. Long-term holders who stayed invested still profited substantially. Time horizon and strategy outweigh market timing. You can invest in silver physically, through coins or bars. This gives ownership of the actual metal, but requires secure storage. Safety deposit boxes, home safes, or third-party vaults are common solutions. Silver ETFs, like iShares Silver Trust SLV, offer liquidity and convenience. Shares represent underlying physical silver held in vaults. You avoid storage worries, but do not possess the metal directly. Silver mining stocks can amplify movements in silver prices. A 20% increase in silver could yield 40 to 50% gains in mining stocks. Companies like First Majestic Silver, Pan American Silver, Hecla, and Wheaton Precious Metals are popular options. Streaming companies provide another hybrid method, funding mines in exchange for future silver at fixed prices. They offer exposure without operational mining risks. This sits between owning physical silver and mining stocks. Advanced investors may use futures and options, leveraging capital to control large amounts of silver. This carries high risk and is not for beginners. Total loss is possible without proper knowledge. Strategy is essential when investing in silver. Allocate 5 to 15% of your portfolio to precious metals. Diversification reduces the impact of market swings on your wealth. Dollar cost averaging removes emotion from investing. Regular fixed investments over time average out the cost basis. Avoid buying high out of fear and selling low out of panic. Set a clear exit strategy, whether long-term or short-term. Know when to take profits or hold for larger gains. Planning ahead prevents impulsive decisions during volatility. Even with recent rallies, silver is below inflation-adjusted all-time highs. The 1980 peak would equate to over $170 today. There's still room for growth if fundamentals persist. Geopolitical risks also affect silver, as mining is concentrated in a few countries. Instability or disputes can disrupt supply and push prices higher. Investors should consider global events when evaluating risk. Digital currencies and blockchain trends make tangible assets like silver more appealing. As faith in fiat currencies wavers, silver provides a stable alternative. Physical ownership remains a hedge against financial uncertainty. Environmental and ethical considerations are important for mining investments. Many companies are improving ESG practices and reducing environmental impacts. Supporting responsible firms aligns with values and business sense. Practical steps. Educate yourself with credible reports and data. Start small, get comfortable with market dynamics, and build your position over time. Silver should complement a broader financial strategy, not replace it. Have your financial house in order before investing. Ensure emergency funds, manage debt, and contribute to retirement accounts. Patience is critical, as commodities do not move in straight lines. Silver is at a unique intersection of industrial demand, tight supply, and inflation concerns. Predicting exact prices is impossible, but the setup is strong. The experts are paying attention, and opportunities exist for informed investors. Engage with the content by commenting, sharing, and subscribing. Your feedback influences future topics at WealthWave. The more people informed about silver, the better their financial decisions. Silver's current surge is driven by real fundamentals, not hype. Supply and demand dynamics, industrial growth, and macroeconomic factors could sustain higher prices. Do your homework and consider whether silver fits into your strategy. Thanks for watching. Drop comments, share the video, and keep building your wealth wave. Stay disciplined, patient, and informed to take advantage of opportunities like silver. The financial world is moving fast, and paying attention matters.